following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that we're going to put into the Tiger TV today is from our good friend Rich Anderson. We've gone down. We were limit down on Friday. We had Rich on. If you remember, they were expecting a bearish on feed report. Actually, the report was relatively good, but the cash market got hit pretty hard and went down exactly to that 111 level and now has bounced about 2.5 cents. So there's a strong probability here that we might have a pretty good rally starting in the cattle market for those of you that are involved in that. I frankly don't trade cattle very often, but the pattern is certainly there. We've got another one that we talked about. We're going to go into the notes in just a little bit, but we're also looking, of course, at the British pound. And as you can see, this is the chart that we talked about on Friday, that we were expecting sometime around the 26th of the month for this time and price to come together. What you're looking at here is you're looking at the British pound from February 29th up into the high that we made on March the 20th. That's the A leg. And then the B leg is from April the 7th to where we are right now. That's, in other words, it's equal in time and price. That level that we're looking at comes in at around the 146.50 level, which we are very, very close to hitting right now. We've taken out the highs. In fact, when I did this earlier this morning, we were looking at the possibility to get up to this 146.50 level sometime today. So far, the high has been 146.20. So watch the British pound at that 146.50 level, because it's going to have a time and price symmetry that you like to see. You have a perfect ABCD there. The BC swing is exactly the same as the CD swing. The AB swing is exactly the same as the CD swing in both time and price. In other words, its rate of change is going up at the same level. So that's another positive thing. If you're in the British pound, you certainly want to be getting out of it. And if you're looking for a place to go short, that would be a pretty good spot, because it's been rallying for 2 months in a bear market. And it's got all the necessary things that would make it. You don't have to sell it exactly at 146.50 if you really want to be cautious. You can wait till it gets to that price. And as John Logan talks about, rejects that area and then would be able to look at it. He actually talked about the British pound at the last part of his show, looking for prices very close to that 146.50 level also. So we will keep an eye on it, but the pattern will certainly be there. I know the British vote, I don't know, I think it comes in June if I'm not mistaken. But I know that a Brexit thing, or where they call the British exit, if that's what it's going to be, will be happening at that time. I'm not sure. But the way it looks like in the political environment now, that just about the governments do darn near anything they want. So my assumption is they're probably going to stay in it, but that's just my assumption. And, you know how do you say assumption? You got to split it up. You make a what are you and a what out of me. So be careful with making assumptions. Try to work with the patterns. But we do have a beautiful pattern, completing in that British pound. Also, yesterday we talked quite a bit about the Treasury notes at the 129.09 level. We have now gone to that level. We've actually gone through it by a few pips. So we are in the zone here at that 109.9 level in the Treasury notes. We're trading a few pips below that right now. But this is a 61% retracement. It's taken almost a whole month to reach there. So that's another one that should be very, very interesting to watch also. Keep that in mind. We've had several questions overnight about the gold and the silver. Nothing's really changed. We had a little rally in gold, not to be unexpected. It was the ABCD type variety that got us up to the 1242 level, and it hasn't really done anything since that time. We're still looking for a potential for gold to get down to that 1190. That's where everything would line up, where you would have your ABCD pattern on the long-term daily, and that's really what we're waiting to see. Silver's backed off now. We're almost $1 under the high, and that's a sign that there's probably some profit taking coming in right now. Now, on checking the open interest figures in both gold and silver, there was really nothing there of any significance that I could find the last 2 days. So there's still not much going on in that market. Remember, silver's had a 12-week vertical rise. So to back off from here is actually a pretty good thing. So I think you have to be patient here if you want to buy the gold and silver, and wait and see if it's going to hit that level. Now, we're having some really good swings in the grain markets, especially in the soybean market. If you remember, the soybean market had this tremendous move to the upside just a few days ago, back on the 21st, when we had all that lunar activity. Beans actually dropped 50 cents a bushel. And that's $2,500, which is quite a bit. But what's happened now? Yesterday, after beans found support there at the 975 level in November beans, they rallied exactly to the 786 retracement of the previous high at 1013, and we're now trading at, I believe, 1001, and we backed off 20 cents from there last night. So we're running into some resistance now in the beans around this 1020 level. So this is going to be interesting, to see how this unfolds, because it's very, very early in the crop cycle. Most of the beans, actually very few beans have been planted already, but there's going to be some wild actions in some of these markets. If we're getting this type of move before the crop's even planted, you can imagine what's going to happen if we get some type of a crop problem somewhere, either due to too much water or not enough water, drought scenarios, who knows. But this is telling us that the people are aware that there's something going on in the grain market. So we want to watch these very, very closely. We're looking for potential buys in some of these, but we're waiting to see a completion of the pattern, and then we'll have a pretty good spot to look at. If you look at November beans, they dropped 50 cents, then they rallied 40 cents. So if they can drop 50 cents from what that high was at that 1013 level, that would take you down to the 963 level in November beans, and that's the one that I think would be really looking very, very interesting. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks, and we're getting a little action in gold here. It's rallied about $11. $11 an ounce here in the last 20, well, actually been the last hour. It hit the exact 38% retracement up here at that 1245 level. So you need gold to get above 1246, I believe, to really get it moving. And I still think we have to be patient and wait. You know, that's the bottom line of what we're at. The one that of all the trades that I looked at this morning, you know, we're looking at the pound, and of course cattle. Most of you folks, you know, don't trade the cattle markets, but the pattern and pricing, everything was certainly there. We're seeing you know, move in the pound up around this 146.50 level. We're still 30 pips away from that. And then also the fact that we have this treasury note that looks extremely interesting here at this. It's trading a little bit below the price, but at this 129.09 level in the bonds, that's a really an important number. It might fail, but the risk on this is, you know, you have to risk around a half a point in bonds because they're the most active of anything we trade. They have the largest open interests and do the most volume of trading of any commodity that we do. However, regarding that, you know, the soybean market actually turned the whole crop over on April 21st. That's never happened before, and we've had even more so in the soybean oil market, where the market did even more churning. So there's a lot of action going on over there. Remember, for every buyer, there's got to be a seller. And when you have that many people involved in the soybeans, when you're looking at farmers, hedgers, and then also the hedge funds, and you know the hedge funds for commodities, there's some really big players out there moving some of this stuff. So pay particular attention to what's going on, because this is a very interesting time for the crop to be moving this quickly before it's even planted. There must be something out there that some of these folks are looking at that they don't mind paying up for it. So just be aware. You know, that's the bottom line, because we're hitting some pretty nice numbers on these beans now with 50-cent swings. That's exactly, you know, what we'd be looking at. You know, if we like to see a pattern form, and as I mentioned, that 963 level in the beans would be something to really look at. The low we made last night was 975, and we had another 40-cent rally up to 912, 914, 1014. So another pullback down there would really be interesting. So we'll watch that one also. So we'll just see what's going on. Regarding the British pound, I've already had a couple of Skypes from people listening to the show from Europe saying, do you go in and do you actually sell the British pound up at this 146.50 level? Well, if you're in the British pound on the long side, which it certainly had every indication that's what it wanted to do, what you would want to be doing would be tighten your stop at least by 50 pip trailing stop, because if the market does reverse from that level, you want to be able to protect your profits the best you can. If you're interested in going short, that if that level is hit, that's 146.50 level, it certainly is acceptable as a short sale using a 50 pip stop, which would be above the 147 level. But if you wanted to be safe, the best thing for you to do is let it hit the 146.50 or higher, whichever that number it goes to, and then let it down bars, or at least one down bar. If you're looking at a hourly chart or something, make sure the market is got some indication that the freight train wants to stop at the siding instead of running you over. I mean, there's no sense in that. If you really believe in the numbers and you really don't have any qualms about it, you can sell at 146.50 and just put a 50 pip stop on it, close your eyes and walk away, because you won't have any control over it anyway. So your risk at that point would be around $300. So it's certainly within the acceptable risk parameters of the things we look at. So it's just got everything that you could ask for in a trade over the last couple of months. It's had perfect A, B, C, D properties, and that ends at 146.50. Time up is equal to AB, and time up is equal to CD, and also the price is equal to AB equals CD. So many things are there that make it a very good trade from a pattern recognition standpoint. In fact, if you would turn that cattle chart upside down, you'd be seeing pretty much the same type of parameters, but cattle are going down and the pound is going up. So you would want to be thinking of shorting the pound and buying the cattle. So we could put that on as a spread, couldn't we? No, that won't work very well. Anyway, a spread. Oh, I know what one of the questions that someone asked me about was the execution of some of these things in the commodity markets. Folks, the commodity markets have changed a great deal since 1997 when we started electronic trading, and now we've almost all the pits are gone. There's a few pits in Chicago that are open. The floor knows they're there, but they don't tell the public that they're there. I believe the corn is open, and there's a couple other small pits that the traders that have been doing this forever get together, but even those are leaving. There's nothing in New York anymore from what I can tell. So we want to be watching that very closely. But what happens is with pit trading, when you had someone on the other side of it, we had these little cards that you filled out, and this was all done by hand, and they were turned in every 15 minutes, and you determined who was buying and who was selling. Now with electronic trading, this all goes through these huge computers, and they're matching it up. And some of the exchanges have I don't know what they're exactly called. Rich Anderson told us about this on Friday. These are designated market makers, and they know where all the stops are, and what they try to do is to equitably fill those orders. That's what they're trying to do. Now, they're not in the business of taking the other sides of the trade. They're just trying to facilitate the orders. But what's happened is, if you're at a key level, let's say, let's just look at gold right now, 1246. That happens to be a key level in the gold at 1246. And if there's a lot of buyers there's going to be few sellers, and so the market's going to have tremendous strength. So if you're trying to put a buy stop in and the market's running really fast, the bids might surpass the offers. In other words, it's bid, but there's no trades. And that's what causes the problems. Then finally, when it does trade, you're out of it. And that's another reason to never, ever, ever use a stop limit order. That's the dumbest order you can get. That means it's saying that if your stop is hit, you're limiting it to get filled at that price. And what happens if it jumps over that price by $1 or $2 and then runs $20? You know, you're out $2,000 and you've not been filled. The stop is placed for your protection. So use it as protection. Don't worry about a fill of $1 or $2 on either side of the trade. You want to be getting out of the trade if that is in fact, you know, what you're looking at here. So keep that in mind, that it's an important factor, because we do huge amounts of electronic trading now. But you've got to understand that sometimes, and many people put their stops at the same place. We've seen this, you know, all the time. They put it at the low of the previous day, the high of the previous day. You know, you should put your stops beyond those Fibonacci support and resistance levels, is what I would be looking at if I were doing it. So that's just what it looks like. We'll have John Persons on in just a little bit. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Testing 1, 2, 3. Looking good, Billy Ray. Feeling good, Lewis. I don't know if I'm back in business or not. I seem to have lost Skype connection. Technical problems.
Philadelphia watch is only worth $50.
Ah, good. We should have John Person on the line now. John, are you there?
We are here. Feeling good, Billy Ray, as you said, Larry.
Hey, buddy, it's a pleasure having you on, folks. This is John Person. I've known John for over 30 years. We met back in Chicago back in the old days when we traded in the pits and stuff. And John is not probably, he is the master of pivot points, and he's a tremendous technician. And we're going to go through some of the things that John is looking at right now. And I think you wanted to start out with the Treasury notes. Is that the one you want to look at first, John?
Well, no, what we were looking at, well, yes and no. It's the relationship, what we call, between the short term or the intermediate term of the yield curve, the 10-year note versus the 30-year bonds. And back in the day, we used to call it the knob spread, notes over bonds. We just take a price differential between the price, not the yield, the price of the 10 and the 30. And noticing that we have a massive potential M-top formation. Last week, we saw that thinking that at the spread differential at 35 and a half, 35, 16, 30 seconds may have been priced for perfection, got room to come back down. And I think that this is something that may be slipping a lot of investors' eyes because so many people have been looking for bonds to go down in price, yields eventually go up. But to me, this looks like a massive trading range and a safe trade to trade off against recent highs. So I'm looking for bonds, and they're down again today, marginally. And then things can change with Janet Yellen tomorrow. But over time and going as we head into June, the month of June, I'm actually looking for that knob spread to trade into around the 29 to 30 handle. And that would put bond prices maybe back the 30-year futures. I'm looking for bond prices to get down around 158 or so. TLT can be traded from the long side. TVT is the inverse, so you'd be buying puts on TLT and you'd be buying calls on TVT.
Wow, that's really interesting. I used to follow the knob spread quite a bit when I was in Chicago, but lately, I certainly have. I looked at the yield. I watched the yield curve, but actually I don't trade that spread. But boy, that's a big spread to trade. It used to be. It was a monster. I remember there used to be like 2,000 people in the pit. It was like a football field.
Yeah, well, that's the problem. I don't think anyone really gives it a lot of credit anymore or attention. It's not certainly that you find in the media, but I think it's also an interesting concept if you take a relationship between the price direction of overall stocks. Take the S&P 500 and then the overall direction of the price of the 30-year bonds. And while there are times that they run in tandem, the majority of the time they decouple. So when stocks go up, bonds go down, that old school of thinking. So what's my take? Let's say your listeners have no interest in trading the knob spread. Here's what I think. If the knob spread continues to narrow or weaken, if bond prices continue to deflate, then I think there's more upside that no one sees coming in the overall equity markets for the next few weeks.
That makes common sense to me, John. Now, I've posted the chart of your E-mini trade, and it certainly, appears to be on an uptrend without any argument. The thing is, it's what you're doing is you're showing the folks that this yield curve, which is what the professionals use, it could be tipping its hand that we are going to be possibly moving higher in equities.
Yeah, I mean, here's a couple things that I'm not just pivots. I used pivots since 1984. And we used them on various time frames. And then I came out with a book back in, 15 years ago, which really launched the repopularity of pivots. And all of a sudden, every Forex trader started to learn about them. And then people started to really accelerate into it. And that first book was called Candlesticks and Pivot Point Trading Traders. And in fact, I think I even mentioned how it integrates with Fibonacci, and one of my favorite Fibonacci experts, which was a guy by the name of Larry Pesavento. Interesting. So,
oh, yeah, I remember him.
There's always a unique interaction of how different technicals and different various forms of technical analysis work. Pivot points based on price. And, price is not, man can't live on price alone. I also, when it comes to equities and other products, I like to look at volume trends, not just actual individual volume, but volume trends. And I also like to take a look at breadth when it comes to the stock market, what like advanced decline is doing. many of your readers and listeners and followers were probably familiar with, the McClellan oscillator, which is derived as a moving average on the advanced decline on the NYSE. Just to fast forward this little nuance, we broke it down to looking at the advanced decline on all the top stock indices. So I can take a look at a cumulative average on the S&P 500, the Qs, the Diamonds, the Russell, the NASDAQ Composite, and I can take a look at most of those indexes are all capitalized weighted index, where a few stocks will, artificially inflate or deflate the index. And if I see a cumulative rise, meaning more stocks going up with the index, that tells me there's more power behind it. There's strength in numbers is the concept. So the charts that I sent you, and actually do look at the S&Ps in particular. We have a monthly and a quarterly price projection on pivots is about 2.5% to 3% higher from where it's currently trading, A. B, we've seen a strong breadth move, and we've seen a strong volume move in this market. So markets just don't roll over and die. Path of least resistance is up at this point in time. And one more last bit of analysis is that old Commitment of Traders report. And, the funny thing is that hedge funds are not as short as they were. Commercials are long, but the general public seems to still be packing on short positions. Larry, that's a recipe for disaster for higher prices for the small specs who are short the market.
Indeed, I've seen some figures on that, and that's could be one of the reasons why it doesn't want to roll over. We got some big patterns up here and a lot of prices, and we've been churning back and forth. But you're right, the information you've got spread is very, very important, because you can't move anywhere without that yield curve moving, and it's certainly telling us that there's no danger in the market at all right now.
Well, a couple things have happened. We're starting to see a lift in, or stabilization, don't call it a lift, a stabilization in some of the Europe markets. And then China, listeners can look at, and I'm sure they're already aware of this, the FXI. Now, the FXI is an exchange-traded fund on the large-cap Chinese stocks, but it's dollar-denominated. So you get a double whammy if the dollar goes up and their stock market goes up, which would be a miracle. But that would lift that value up, because you have to convert U.S. dollars to foreign currency and trade those foreign currencies and then revert it back.
Yeah.
It's a nice little way of tracking.
Oh, John, we got to take a little break here. Stay with us, and we'll be right back. Okay.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with John Person. John, just to switch gears just a little bit, and then I'll let you go. But do you have a feeling on the gold market? We have a lot of folks here at TFNN that follow gold pretty much exclusively.
All right. So gold, I think, has a strong shot, and I don't want to say today, but I think between now and, say, by the June option expiration or quarterly option expiration, I think June has a strong shot at seeking value down around the 1190 handle. To me, I'm looking more for a pullback there, and I think what might happen is in the next week or two, you see a little bit of a dollar strengthening move, and then less fear coming out of people wanting to be in gold in the European and then foreign side of things. So that's, after that, my analysis, I can't predict where things are going to go more than a year out. Most economists can't either. So I figure I just kind of keep it quarter to quarter kind of thing. And so for right now, for me, gold around 1190.
Well, I'm looking at that too. We've seen a lot of technical. There'd be a 382 retracement of this back, the big move that we've had coming out of here. Do you do much in the grains anymore, John?
Sure. Look at the, I do a lot of the seasonal grains and a lot of spread trades. And, part of what I do is, it's like a whole, everything's tied in together kind of thing,
It sure is.
Before we get into grains, let me point one thing out. This is where we are in the markets right now as far as equities. On January 19th, when the world was being told to throw out all their stocks and jump out windows and throw the baby in the bathwater out, on or about that, as we started the year out, by January 19th, only one stock sector out of the 20 I follow, and you can go through all the X's, the XLP, Y, the alphabet, right? The IYT, transportation, everything. Only one stock sector was positive on the year. It was utilities. Today, we have out of 20, we only have two, the KRE, the regional banks, and the IBB, the biotech sector, negative on the year. Everything else is lifted from that point in time. So what's the thought? If everything was worried about market was going down and flight to safety buy gold, and if everyone starts to feel more comfortable that maybe things aren't as bad as they were, maybe you see a pullback in gold, some profit taking, and then you get that last little worry, and then gold dips back down. And then we'll look at the condition of gold at that 1190. And, markets always all overshoot my targets, so maybe it's 1175, maybe it's 1160 for a minute, in the overnight session, something like that. But I still think there's value in gold going forward into the 2017, 2018 time period, long term. So, that's my handicapping at best for you, Larry.
Hey, that's terrific, John. And if they want to reach you, they can go to Persons Planet, www.personsplanet.com.
Correct. Personsplanet.com, that's where we have the Persons Pivots. It's on the Thinkorswim platform, and we have a lot of educational information there and a lot of great free information there for investors looking to learn more about different various forms of well, my style of technical analysis.
That's great. John, I want to thank you for being on today, buddy. It's always a pleasure talking to you, and give my regards to Mary.
Hey, Larry, you're a champ and one of the great guys. So thank you very much. An honor to be on the same stage with you on your show. Thank you very much, man.
Yeah, thanks a lot, John. That was John Person of personsplanet.com. Been around for a long time. He's very good at what he does. Anyway, he's got some good information. In fact, I'm very interested about the fact that he was looking at that treasury or the gold at 1190 level. So that's going to be an interesting one to watch also. So we'll keep a close eye when we get to that level. But his work is based on how the market moves in pivot points. It goes to different levels, and he's done a great deal of work on that. And it's several of these pivot point things are in like it's in the Thinkorswim, and I think it's in TradeStation also, that gives you some points of support and resistance. We use patterns and Fibonacci ratios, which sort of come up with the same numbers, just a little bit different way. Okay, that's what we're watching. The stocks are a little bit higher right now. We got the S&P up a tad. We got gold up about $9. It looks like $10. We did get up to that 1246 level in gold, and it hasn't done much. It backed off a buck or two, not too much going on right there. So it's still a little early in the morning. The bonds and notes are still down a little bit. The notes are still below that key price that we're looking at, which is the 129.09 level. The thing that's interesting is the thing that we're watching is the fact that the Yellen is going to be in there today. So that is going to be a really interesting one to watch, because the Fed does move the market when that woman talks. So pay attention that when she does talk, that we can get violent reversals in some of these things just by the slightest nuance of the inflection in her voice is sometimes enough, to make these things, go bonkers one way or the other. So just remember, this is Fed Day. Yellen will be speaking today. I don't know the exact time, but I believe it's around 11 o'clock Eastern time, 11 or 12 o'clock Eastern time. So put that in your bailiwick. As far as the British pound, we've been up to 146.37. We're looking for around 146.50. The market has slowed down quite a bit. We're not having these really strong bars, and so I would assume that we're going to have some pretty good action up here in the pound at the 146 level. And we'll be able to see see what's going on. Anyway, that's what we're watching in the currencies. We've already covered the grain markets. John Person, who we just had as a guest, is also looking at these grain markets as for potential for bigger moves and waiting for a pullback. It was interesting that he was looking at the exact same price that we're looking at in the gold between 1190 and 1175, but it's still early. We're trading $50 above that level at the 1243 level, given the fact that we've had a nice rally off the bottom. Remember, we went down to 1228 during the other day. If you add $17 to that, which is the harmonic number in gold, guess where that takes you, folks? Bada bing, bada boom, to today's high. So just to be careful, because those things move in those increments of those Fibonacci price swings of the harmonic number, which is nothing more than a DNA of how the markets move. In other words, it moves in segments of 11 and 17 and 34, just like the S&P moves in segments of 5 points and 3.5 and 11 points at a time. So those are the ones that we're watching. There should be some strong resistance in the S&P up around the 2095 level. That's the 61% retracement of this whole move that we've had recently. So pay close attention to that level. That's going to be interesting. We've already hit that level in the Dow Jones, but we're considerably behind it in the NASDAQ. So all of that is telling us that we're getting ready for something pretty dramatic to happen today, especially when the Fed's speaking. That'll make it even more dramatic, which is, like we need that, like we need another roof on your house. So those are some of the factors that we're looking at as we come into Fed Day today, watching it. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I guess I'm wrong. I guess it's going to be Wednesday is when Janet Yellen is going to be talking. I thought it was today, but it looks like it's Wednesday. You'll have to double-check that yourself because I've totally missed it, I guess. I was going on what I heard on Bloomberg this morning, but maybe I heard it wrong, so we'll see. We do have the stock of Apple getting ready to report today, and as you know, that stock has a history of, I think, 80% of the time after the earnings, Apple gets goes higher. And we did stop at the 61% retracement at 112. We backed off about $7 from that level, so we should be at a pretty strong level to see what's going on. Oh, we've got a caller from Singapore. William, are you there?
Yes, I'm here. Thanks for taking up my call, Mr. Pesavento. Actually, I'm going to ask you the same question about Apple.
Yes.
Yes,
Well,
whether you see that Apple's likely to move lower after the the result reporting, because I'm looking at the ABCD patterns where Apple will move to a target price of around 80 to 82 level. I'm not sure whether I'm correct to say that.
yes, it does have an ABCD pattern there, but that's a really long one that goes back over months. I look at a little bit shorter time frame. There should be some resistance at 112. In other words, it could rally $7. Well, Apple can go anywhere, as you well know, but it has some pretty good support coming in, William, at the level of par, $100. So I'd be looking at sometime between $112 and $100. We're trading in the middle of that right now at 105 and change, but that's what I would be looking at. And the only way you could really play that would be with options, because you don't want to expose yourself with earnings with Apple, because the sticks are not in your favor. So be very, very careful. And if you do it, use options so that you have a little bit of flexibility.
Okay.
Thanks for calling in, my friend. I appreciate it.
Yeah, thank you.
You bet. 877-927-6648. Thank you for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.